Hey guys, All in Crypto here and welcome back ladies and gentlemen for another YouTube video. I hope everybody is having a great morning so far. Today we're going to be diving into the cryptocurrency markets as a whole as we are seeing somewhat of a pullback. There's lots of fear. Whenever the cryptocurrency space pulls back, people always panic. No matter how many times it's happened since they've been in crypto and recovered, there's always that kind of recency syndrome lingering, and we're going to be essentially putting a lid on that panic. We're going to be trying to calm people down a little bit and really going into what's going on here. And right now, the cryptocurrency market is largely being affected by external markets and macroeconomics, and we're going to get into that in this video. And this is something that you need to, and let me repeat this guys, if you want to be any kind of a serious investor, you need to not only pay attention to the crypto space, but markets as a whole, global finance as a whole, because it's all very correlated. Now that the crypto space, and this is what we all wanted, for it to be a recognized asset that has some sort of credibility, now that it's in that kind of game with the big boys, and it's still not a big boy yet, it's still very small at $2.4 trillion. You're talking about markets that some of them have quadrillions sloshing back and forth. Now that we're in that game, you have to play by those rules. And those rules are that when something happens on a macroeconomic scale, you get affected. We saw that in March 2020. Everything got affected. There was a huge run into liquidity. We've done a lot of analysis with that in relation to the dollar. You can see this was your March 2020 event here, where everybody ran into the dollar and everything else sold off. So what we're going to do in this video is go over why the cryptocurrency space is selling off, rule out a number of reasons that are floating around on the sort of crypto Twitter space and crypto YouTube, like liquidations. Everybody always goes, oh, it's just more liquidations. Liquidations are relatively low in comparison with the sort of liquidations we've seen lead to huge sell-offs. What's really going on right now? And this is a huge factor. There's multiple factors, but one of the main ones, and it's why we see, for example, the UK FTSE 100 selling off. The S&P is actually doing all right, and the Dow Jones is doing somewhat all right. Gold's doing very well recently, certainly since yesterday. But really what we're witnessing right now is people are somewhat hedging their bets against what potentially could be coming in the future. And what I'm talking about is a new variant. Now, I can't say, due to the YouTube algorithm, what this is a variant of, but I'm sure you guys all have a good understanding now and are suddenly watching the news. This is causing a lot of fear, certainly with the UK FTSE 100. This is largely getting dragged down massively by travel and leisure. So we're seeing people maybe run to liquidity in fear of further downturn, further decline. And this is really important to pay attention to, because what you're seeing, and this of course is Bitcoin, we are going to draw and really kind of rationalize the whole thing in just a second by drawing some fibs, etc., to kind of show you where we could be going to. What you're seeing is external markets and macroeconomics affect the crypto space. We're not in our own little bubble anymore. We're part of the bubble. And by bubble, I don't mean, we're going to part, but I mean, we're part of the financial space now. We see the same actors coming into crypto that we see in the traditional financial world. And there's a huge other factor at play right now, and it's worth me mentioning. We've done a lot longer videos on it. This entire pullback, this 55% pullback that had everyone screaming for a bear market, was 100%. Let me actually go to the daily time frame. A symptom of what happened in March 2020. This was a freak event that was very inflationary. If we take a look at the S&P. This was March 2020. Look at what happened after. This is unnormal growth, essentially, ladies and gentlemen. And this has to have a cooling off period. And this is why you're going to see, not just in crypto, but markets as a whole, more longer drawn out dips as we're kind of reaching an equilibrium, if you will. So the markets are selling off today due to external factors. The new variant sort of worry is a huge factor, not just in crypto. We're seeing it across the board. Certainly we're seeing it in UK stocks. But things aren't as bad as they seem, ladies and gentlemen. We're going to jump into Cardano as well. We are actually seeing the dollar. Usually they're very, very correlated. There are pariahs within this. We're seeing a little bit of dollar weakness. This could have a little bit to do with what's going on between the US and China at the moment. There's so much that you've got to take into account. But people are blaming the Indian government. There could be some fear caused by this. This undoubtedly is going to cause some Indian citizens to perhaps sell their crypto in fear of regulatory backlash. but it actually doesn't exclude citizens from holding crypto. It just sort of prohibits them from transacting it and using it, essentially, if you will. So I don't think this is a huge issue. I mean, India have banned crypto quite a few times now. They should just ban it already if they're going to. That really upsets me for the Indian citizens, because it really only hurts them, certainly in such an inflationary environment. Bitcoin liquidations aren't really causing this. They are having somewhat of an effect. Naturally, you're going to get liquidations when a market starts to sell off. You do also have $3 billion worth of options that expired today. Bitcoin puts options become pricier amid Fed rate hikes fear. So there's also, as well, why we've seen a little bit of dollar strength, and this is important, you've got to pay attention to the whole picture. It was really somebody that really drilled this home to me, and this guy has been largely spot on with everything that he said, is the Crypto Sniper, with his 360 analysis, where he looks at traditional markets and applies it to the crypto space. Because we are now, when you want to play with the big boys, you've got to play with by those rules. And it's the same actors, the same people that pull the strings on the one side that are now pulling it on the other, and we're a part of that, and you're going to get affected in the same way. And an interest rate spike, the Fed are in a bit of a weird situation. This goes into sort of a macroeconomic. This is why we've seen this strength for the dollar, I would say, largely. This was pointed out by the Crypto Sniper, somewhat of a head and shoulders here, where this is your neckline that you've looked to have broke to, an inverse head and shoulders. Quickly invert the chart. So the dollar could be gaining strength. It is certainly gaining strength against other currencies. But one reason you could be seeing quite a little spike up here is due to sort of interest rate hike fears. And this, of course, when interest rates go up, people don't understand why. I'm sure many of you do, but just very quickly, why interest rates affect, and a rise in interest rates will affect stocks and assets. Is one reason stocks and assets are where they are today is because money has been so cheap to borrow, and you see lots of companies going and buying their own stocks up. Whereas when an interest rate occurs, it essentially increases the value of money in terms of borrowing it, and it becomes money becomes more expensive to borrow. And this sees a kind of pullback in the level of investing that's going into assets and pumping everything up. So there's a lot at play. Of course, this is sort of, I think, and we actually looked at this in relation to Bitcoin and the 4-year cycle theory and the lengthening cycle theory. With this cycle that we've seen was very explosive, and we actually outperformed the last cycle, and this is unusual. And this is why we're seeing these kind of longer drawn out pullbacks, and the markets are going to, look at what's going on in the world, guys. That undoubtedly is going to have a huge effect on markets, and it's going to be choppy. But one, really amazing message that I want to deliver, and certainly if you guys aren't already in the Discord, please join the Discord, because it really helps to be with like-minded people. And somebody that's as bullish on crypto as myself, I know where this space is going. It's got a long way to go, and this choppiness, in hindsight, when we look back, is going to be largely laughed at and looked at as buying opportunities. But there's choppiness across the board, and it's due to the kind of macro financial situation that the world is in, due to what we saw take place back in March 2020. And we're still seeing that echoes, and certainly at the moment with this whole new variant, I've lost track of how many variants there are at this stage. We are seeing people maybe run to liquidity in fear of further downside. So there's a lot going on. I don't think there's any reason to panic. What has changed fundamentally in the crypto space? Absolutely nothing. It's largely being affected by what we've just spoken about. And this really, if you can see the wood through the trees here, if you had invested in Amazon at $6 after the 95% pullback, you'd be a real winner. And that's what, if there's value in something, that value doesn't go away regardless of the price dropping. That value is still there. It's just unrealized and unrepresented at that certain time period. And that's what you've really got to look at. So in relation to Bitcoin, how bad can it get? Well, I see people calling for a bear market, and this really, really winds me up. And I think YouTubers, if you see a YouTuber with his hand over his face, pointing at a chart going, warning, epic sell-off, or this could be the end, or something like that, please unsubscribe to that individual. It's ridiculous, and certainly on days like this, it doesn't help anybody out. What you are, every time there's this pullback, and it's a 21% pullback, which we've seen multiple times just this year, and throughout Bitcoin's history, a 21% sell-off is actually mild. You get the same people calling for a bear market. That is hopium. When we talk about hopium, that is hopium for you guys. They're people who wish we are in a bear market. Those signs aren't there yet. You've not even put in a lower low here in a bigger trend. Things still look good. We are going to do, this was just a video because I wanted to sort of address a lot of the panic and really explain what's going on. We are going to do a longer video where we've updated the Bitcoin 4-year cycle theory, where we look at that again in the lengthening cycle theory and see what we think is probable and how long this bull market's going to go on for. No one knows when the bear market's going to come. No one knows when the bull market's going to end exactly, but we can take our best guess at it and looking at it and the signs that would kind of coattail maybe the market ending, maybe, this and that. So we are going to do a video on that. You can see here, you have, and we did say this in yesterday's video, this 0.5 level is key. This is your halfway mark, and we saw in Bitcoin's last move up and retracement, and this is a move up and you're still in a retractive move. You can see that you did bounce off the 0.5. You sold below it, you came above it, you found it as support, and then you kind of held it as support before you saw that continuation. You could be seeing a similar thing play out today. Very quickly, we'll take a look at Cardano. We gave you these levels yesterday. This is the chart that we actually pulled up yesterday. As you can see my draws, this $1.48 range is significant because not only is this your 0.786, this is where you really started this impulsive wave. You never came back to retest it, and you can see just how many times it's acted as resistance. Potentially now flipping as support, and you can see you bounced very, very closely to it. I didn't actually get filled because I had my levels on 1.58, but I will be looking to take advantage of this. I'm still going to be absolutely buying not only Cardano but cryptocurrencies as a whole. The opportunity is still there, ladies and gentlemen. Don't let the macroeconomic sort of state of things sway you, because this, just like I held through March 2020, plenty of people that can attest to that within the Discord that know me, and it was a very scary time. It was one of those times for me where I went, okay, maybe I've made the same mistake here as 2017. And then I took a step back and went, well, okay, what's really changed other than the price? Nothing. In fact, it's only gained in strength in terms of fundamentals, and they will win in the long term, guys. Just like, and I keep bringing this up, Amazon went from $106 to $6. The price doesn't always very fairly represent value, and it's often a symptom of what's going on a macroeconomic scale. And we saw this, we know this. This was obviously Bitcoin. Look at what the dollar did. People run into liquidity in order to kind of play the game. So the dollar is seeing a little bit of weakness. We're seeing gold. It could be quite correlated with gold. We'll have to have a look at some of the other currencies that are pegged against the dollar to see what's really going on there. You can see gold's actually done very well recently. There's quite a bit. I think precious metals are looking to wake up. I don't know where I stand on precious metals. I was in precious metals before I was in crypto, but they're a very slow hedge, if you will. They're not, they're one of those trades. They're one of those holdings that you're wrong until you're right, and then when you're right, you're going to be very right. And crypto just seemed like a way faster horse. Now on to where we are, and this is why it really winds me up when people call for a bear market. You're doing the same thing that you did over here, and then you went on to make higher highs. You're going to do the same thing again, ladies and gentlemen. Until we start invalidating some structure, then there's no real need to worry. But what we did point out yesterday was a potential head and shoulders here. Left shoulder, head, right shoulder, this being your neckline. And we looked good yesterday, but we didn't actually invalidate our left shoulder. So that could be, it is a weaker, so there is still the potential for downside. Very quickly, I'll give you a target for that. We'll just use that as a neckline, a very rough neckline. If you do continue to see this market roll, guys, which I'm not saying it will, a lot of your indicators are flashing very, very bullish. There's hidden divergence in a number of the altcoins. You could potentially be looking at going back to under $1 trillion. Now, I'm not saying that's going to happen. Often these head and shoulders don't play out. You could say you had somewhat of one over here and it didn't quite fulfill. But there is always that, markets don't just go up. There's ups and downs to them. But how you win in the crypto space, and this is a tried and proven message, and let this sink in, ladies and gentlemen, is by hodling. It's tried, proven. And the reason hodling works is because in terms of adoption, you're nowhere near where you're going to go. This is still a very small space, still very speculative, and still very unused. If you look at the people that actually hold crypto, and then you look at the people that actually use crypto, it's 1% of 1% of the world's population potentially, and this is going to grow in the same way that the internet started off very slow, or even things like cars. When the invention of cars came about, it was very few and far between, very skeptical, etc., etc. And now everybody uses them. This is adoption. You're going to see this for crypto. You're nowhere near there yet, and that's really, I hate to use this phrase because somebody else uses it, but time is absolutely on your side. It's a very correct phrase. So take a look at markets around you. The FTSE sold off. We're seeing a little bit of a buyback now. It sold off quite significantly, actually. This was, of course, March. I mean, wow. The FTSE actually hasn't recovered. That's interesting. Since March. So that's, you know, we are going to do a lot of cross sort of market analysis. The S&P is doing fantastic. That's just due to some of the stocks you've got tied up within the S&P, and probably due to just how much money the actual US has printed. This would have undoubtedly had a lot of that money. We like to think that it goes to the sort of people that need it, but it just goes into stocks and stuff like that. It's a corrupt world we live in, ladies and gentlemen. That's the game that we're playing. We're going to see how the Dow kind of continues on today. Gold's doing well. We're seeing a little bit of a pullback, as we're undoubtedly going to see for the rest of it. But this is crypto, guys. Very, very volatile asset class, and you've got to sit through it. But we are seeing a little bit. We have passed through the 0.5, but it's very common that you'll pass through these, get bought back, and then if you start to see it acting as support, expect that continuation. I'm going to love and leave you on that note, guys. If you've enjoyed the content, like is always appreciated. So is a comment, and I look forward to seeing you all in the next YouTube video. Don't panic, ladies and gents.